One, two, three, testing. One, two, three. Hello, Loïc. Tu peux poser les questions en français si tu veux, Loïc. All right. Let's wait a little bit for more people to join. And then I'll start. Hello, ABOB. How are you, mate? How's everybody doing? It seems fat live. I don't understand that, ABOB. Güey, en français. En español también, si querés. Claro. Yeah, so we're going to wait just a minute or two. Emmanuel, how are you, mate? Just a minute or two. Yeah, just to wait for more people to join. Emmanuel, we have two Emmanuels. Hi, Orlando. Thank you for your service. You're more than welcome, mate. You are more than welcome. So, um, the chat is open for everybody if you want to ask questions. And yeah, just go ahead and ask as many questions as you can, and I'll answer them. So, uh, we are now trading, in end of the year price action, so everything is quite choppy. And to be completely honest, not too many opportunities, right? So what we're going to do today, we are just going to go through what I look at every day. How I find my bias, the direction of the market, how I identify liquidity, which is very important for my entry model, the conditions or the rules of my entry model, and then executions and trade management, right? So, uh, let's start with that. All right, so can everybody hear me? Is everything clear on your side for me to start? If so, please type yes on the chat so I can start. All right. So for everybody just joining me, the chat is open for you to ask as many questions as you can. All right. So we are going to, first of all, awesome. Thank you. Thank you. So we're going to look at, how I define the daily bias. That's very, very, very important, right? Because if you can't identify the daily bias, the probability of success of your trades is going to be mediocre, if not, unprofitable. Vincent, yes, all good. Can you take a look at your GBP on the 1 hour time frame for possible longs? Listen, Nate, this is not a live show. That's why, I started late at night. This is educational only. But at the end, I will look at, the actual markets. So stick with me, and for sure. So, daily bias. Why is the daily bias so important? Well, the answer is quite simple. If you don't know how to identify the direction of the market or the daily bias, you are not going to be able to trade profitably. All right. So, the boxes that you see here on my chart, right? We're going to focus on the big chart right now. The boxes that you see here on my chart are the session, the Asian session in blue, right? The London session in green, and the New York session in gray. Why do I have this on my chart? Because for me it's very important to visually have the end of the Asian session and the beginning of the London session. Why? Because I do not trade the Asian session at all. Never. I never trade the Asian session. Why? Because normally the Asian session is quite choppy, right? It's a range, right? And there's no way for me to have a clear bias or a clear direction on the market during the Asian session with the low volume on the markets that I trade. Yeah, there are some times because the markets that I actively trade are the US dollar and the Japanese yen, right? Sometimes I'm going to miss Japanese yen trades because a lot of volume is going to jump in during the Asian session on the Japanese yen. But to me, that is completely and utterly fine. Now, the reason that I don't trade the Asian session is because the London Open gives me the direction or the daily bias, right? So I'm going to go through the markets and I am going to show you a few examples of what I look for, right? Now, this is because right now we are in a very, very choppy, price action. Remove drawings. I'm gonna go to, yep, this is fine. Maybe the Euro USD. No, the pound US dollar is fine as an example. So, if you notice, right, the Asian session, and again, if you want, I urge you to ask me as many questions as you can. Jonás, ¿puedes explicar rápidamente en español luego? Yes, claro que sí, claro que sí, claro que sí puedo explicar en español, no te preocupes. So, and again, if you don't understand English 100%, you can ask me questions in French and in Spanish. I speak both languages. Actually, English is not my first language, so Spanish is my first language, and then French could be my second language. I don't know. So basically, I'm going to start with the daily bias. And don't worry if I don't have time to finish explaining, my entry model. I have another webinar scheduled for Thursday, I think. So let's go, and I'm going to thicken the chart out on the Asian session, right? This is today's Asian session on the pound US dollar. So if you notice, it is quite rangy. So I wake up around this time of the day. For me, it's around 1:30 a.m. Why is your indicator to sessions? What is your indicator for sessions on TradingView? Yeah, good question. I'm going to tell you. It's called, hold on, let me double click here. It's called Asian Session Range, right? This is the one that I use, the one that I like. There's a ton of them. So, I wake up around this time of the day, around 1:30 a.m., right? To look at London pre-market and the London Open, right? If you notice, the Asian session is always a range, always a range. Now, the first thing that I look at on my chart is this. You can see that we have a double top here. Now, double tops, the first thing that you're taught when you come to trading, right, is that double tops are a chart pattern to look for shorts. Now, you need to understand that I don't trade chart patterns. I don't trade candlestick patterns. I don't trade with indicators at all. It's just pure price action, right? So, the London pre-market comes in, the volume comes in, and what happens here? We have a break above the Asian session highs. Now, does this give me a true bullish bias for the day? Absolutely not. Absolutely not. Why? A couple of things right here. with my entry model, what I look for are weak players in the market getting stopped out, right? That's liquidity, okay? So when I was talking about this chart pattern, double top at the Asian session highs, right? Where are these short players are going to place their stop losses? Now, if we zoom in on the chart and we look at the previous highs, let me point it out here. These are the previous highs, right? The previous structure highs. These players in the market are not going to place their stop losses above the structure high. Why? Because that is too wide. That is too wide. So normally they're going to place their stop losses a few pips above the Asian session highs or above that chart pattern, right? That you are taught to look for shorts in. And that, my friends, is liquidity. When I talk about liquidity, I'm talking about the stop losses of the weak players in the market that I look for, right? So what happens here? The London session volume comes in and goes and hunts that liquidity, stops out all of these players. So is this a true breakout or not? I don't know. No one knows if this is really a true breakout and price will continue to the upside. So what I do is I just look at this. So sign number one, we have a liquidity sweep. We don't know if this is going to be a break of the structure to the upside or just a liquidity sweep. So I don't trade the first, spike or the first volatility induced move. I don't trade it, right? I wait for true direction. What happens here is that price comes down and breaks with these lows. Now, here is where I will start looking for shorts. Now, I'm going to go to the 5-minute chart so it's clearer for you, right? Yeah, this is much, much clearer for you. Now, this is where I will start looking for shorts. Why? Because what I look for are market structure shifts, right? Whenever I'm going to, or whenever a setup is brewing. Now, what is a market structure shift? Where a market structure shift is basically a pattern. Yes, I know I told you that I don't trade chart patterns, but it is a pattern on which you can have not a certainty, right? But you can know that the probability of success of, in this case, the short setup that I'm looking for will be much, much higher than looking for longs, right? Why? Because if you notice on the short term, right, the structure in this market was bullish, right? Now, the structured lows are this, this, and this, right? Those are the structure lows. So, not only I need to wait for the weak players in the market to get liquidated, but I need a true market structure shift in the sense that I need a true break of the structure lows. Now, if this is the liquidity sweep, I look for the next low, and this, my friends, is where the market structure shifted. Now, am I going to place a short here? Of course not. Of course not. Right. If you have any questions, just go ahead, use the chat. If I'm going too fast, tell me on the chat. If you want me to go back and, explain something, more in depth, just go ahead and use the chat. So, everything is about patience, right? And everything is about discipline, and everything is about, trading those high probability setups, right? Because if I were to jump, let's say if I were to jump in here short at this market structure shift, right? I have absolutely no setup, right? I have absolutely no setup to go short. Yes, I have a structure high to place my stop losses, but I don't have a true a market structure shift with this, choppiness. So let's go back to the 3-minute chart which is the time frame that I use to place my um, orders, and let's have a look at what happened here. So I'm going to use actual lines, the ones that I use for my VAPs. So if this is, the liquidity sweep, right? We still don't know, right, if this is a liquidity sweep or a break of the structure to the upside. But when this low breaks, I'm sorry, hold on. When this low breaks, now we have a true market structure shift, right? We know that the bias, or at least the probability of price trading to the downside in this particular session is way higher than the probability of price breaking with the highs and continuing to the upside. So that's the first step. You can go a bit faster if you want, yeah. ABOB, is that what call ICT? These are ICT concepts. All right, so that is a great question from ABOB. I didn't invent this, right? I didn't invent, the wheel at all. These are ICT concepts, right? But I took ICT concepts and I created my own entry model, which is the only one that I trade, right? I don't trade silver bullets. I don't trade, his entry models. I created my own. So, Abbas, not go fast, please. All right, so if you want me to come back, just ask. So once we have this market structure shift, I'm actively looking for shorts. Now, can anyone tell me the moment that we should be looking for shorts? I'll wait. I'll wait for a second. Don't you worry, I'm here. All right, no, that's fine. I'll just keep on going, and you can ask questions along the way. Now, first of all, I need this price structure, right? It doesn't matter if I'm looking for longs or if I'm looking for shorts. This is the price structure that I need for me to actively look for a setup. Again, I don't have a setup yet, right? After this break of the lows, or this change in character, market structure shift, whatever, right? Here is where I'm going to look for shorts, right? Here's a break of the structure. Now, this is what's cool about this entry model and about having patience about it, right? Now, this is a break of the structure. Not only, weak players or weak players in the market, weak short players in the market were liquidated, but we had that market structure shift from the entire Asian session. But this break of the structure with this volatility, right, enhances my idea to look for shorts in this market. Now, this is what's cool about this entry model. Now that I have an optimal, daily bias, now that I have an above a higher than average, bias to look for shorts, I'm going to actively look for my setup. Now, after the first breakout of the downside, I don't understand, Vincent. Can you just type your question again with a little bit more of context, because I don't understand. So after this break of the structure, right? what is it that you see in this chart? What is it that you see? This is a massive break to the downside. Massive break, right? We know that sellers are in control of this market. We know that sellers are in control of this market, right? Now, I'm looking for shorts. I'm going to go to the 1 minute chart, right? Just to show you exactly. Uh-oh. Hold on. Let me go back here. All right, so this is the 1 minute chart. Again, massive break, and I'm going to go ahead and thicken this chart out for you. Massive break to the downside, massive break to the downside. So, what I look for is this, right? A very, very strong break of the structure, leaving an inefficiency in the market. All right, hold on, I have a question. Where you put the break of the structure, that is what you would start looking for short? Exactly, exactly. That is where I would start looking for shorts. The reason, Vincent, or Vicente, is that after the market structure shift or changing character, whatever, right? There is no strong break to the downside. And what I'm going to explain right now is where the setup or my setup develops, right? I need this inefficiency in the market created after the break, right? Because I trade market inefficiencies. That's what I trade. So if you notice here, right, hold on. If you notice here, after this break, there are no market inefficiencies. Well, there are market inefficiencies here, right? But there is no break of the structure here, right? There are market inefficiencies here, but there's no break of the structure. These are just equal lows, right? And with the same idea as the equal highs during the Asian session range, equal lows create liquidity here, which is going to get hunted, right? And this is what creates this inefficiency in the market. Can you please show which session break indicator again, please? Yeah, hold on. So, I'm gonna go back to the 3 minute chart. Sorry. 3 minute chart, which is the time frame I place my trades on. So, after this big break of the structure, we have this inefficiency. Now, inefficiencies are gaps in the market, are imbalances in the market, right? What are imbalances in the market? Where simply explained is an inefficiency in price action or in price auction. Remember, this is an auction between buyers and sellers. And moves like this, right? If I were to grab, actually I'm going to show you this because it's kind of cool. If I were to grab the volume profile for this candle alone, hold on. All right, fix volume range. Right, for this candle alone, right here. If you look at the volume, I'm going to thicken this out again more. If you look at the volume profile on this candle alone, it shows you the inefficiency in the market. Right here, zero sellers, zero sellers, zero sellers, zero buyers, I'm sorry, and only sellers. This is an imbalance in price auction, right? An imbalance or an inefficiency in the market, right? This is a very volatile move where sellers jumped in and there were no buy orders. That creates a gap, and this is the opportunity I look for, right? So, another question, can you please show which session break indicator again, please? So the boxes, I reckon you're talking about these boxes. The boxes is called Asian Session Range, right? It's a free indicator on TradingView. So what I do here is I look at this break of the structure and this imbalance right here. This This is the imbalance I look for. This is my entry. This is my entry. After this break of the structure, after that inefficiency in the market, price goes a little bit lower, and I place my entry here at the bottom of the imbalance because I'm looking for shorts. Again, there are a couple of ways to place this stop losses, right? Um, I use the structure highs, which in this case is the London session highs. Why? Because I'm trading a bearish structure, and this is a swing high, and this is the next swing high. So price could most definitely go against me a little bit, right? And then continue to the downside. But if price goes against me and breaks with this high, which is the protected high, I don't want to be short anymore. What max time frame can use for this strategy? Listen, that's a great question, ABOB. Just a second. That is a great question. Um, this, this particular entry model is based on, daily, let's call it daily breaks of the Asian session highs or lows. But imbalance plays or inefficiency plays can be played on a higher time frames too. All right, our inefficiencies are most significant on the lower time frame compared to higher ones such as 4 hours, since when you go down in time frames, the 4-hour inefficiency is often not there in the 3-minute or 1-minute time frame. That's a great question again. So that is a great question again. Now, the market does two things. It either draws to liquidity, or it fills imbalances or inefficiencies, right? That's what it does. Let's imagine that on the 4-hour chart we have a massive imbalance here. Now, this theory, explains that price would eventually go up to fill that imbalance. But I really don't care about higher time frame inefficiencies, since my entry model is a day trading entry model based on the 3-minute time frame and inefficiencies, and I manage my trades quite aggressively, right? So I don't look at a higher time frames. Yes, the highest time frames that I look at is the 15-minute time frame, right? And I'm going to show you why. So until now, right, I've explained to you how I look at this, right? Where I place my stop losses, but now targets. Where are my targets going to be? That's also very fucking important. Now, I go to the 15-minute chart. Let's have a look at the 15-minute chart. Now, all the 15-minute chart, here's my entry short, right? And if you notice, on the 15-minute chart, to answer a question about if this entry model works, on the higher time frames, here we have an imbalance that was mitigated or filled, right, by price action. Price action continued to the downside. Again, I'm not going through that. But what I look for, on the 50-minute chart are targets. So, where are my targets going to be? Oh, I'm going to delete this, I reckon. Yeah. So, where are my targets going to be? Now, a couple of things here. My entry model is a day trading entry model, right? I rarely hold, trades overnight, rarely. The way that I manage my trades is quite simple. Whenever my trade is running at a 1.5 R, I take 1 R off, and if price has created another break of the structure. I moved my stop loss to break even, but I'm jumping ahead of myself. This is also going to be explained here. Now, targets. Where are my targets going to be? Now, if we look at past price action, right? Here we have a break of the structure to the upside, and again, what I look at, break of the structure to the upside, right here. But here is the order block that created that break of the structure. But what I look for are inefficiencies in the market. Again, here we have one. Sorry. And extend right. Here we go. Here is where my target is going to be, at this inefficiency on the 15-minute chart. Why? Why is my target going to be here at this inefficiency on the 15-minute chart? Because what I told you, the market does one of two things. Either it draws on liquidity or it fills imbalances, right? So my targets are going to be either equal lows in this case, because I'm on a short position, or imbalances left from bullish order blocks that created the previous break of the structure to the upside. In this case, I am going to use that imbalance. So let's go back to our 3-minute chart, and let's have a look at the real risk to reward ratio on this trade. So I have a 1.4 risk to reward ratio on this position, which is okay, I guess. Not the best risk to reward ratio. Hold on. Hold on. There's a massive bee, and I'm allergic to bees. I need to kill it. Tenía un aguijón, mi amor. I'm sorry. It wasn't a bee. It was like a wasp, big wasp. I'm sorry. Yeah. It's because I live out in the nature. So, not the best risk to reward ratio here, right? But remember, we're trading, in a very, very slow market here at the end of December. But setups are still much there. Again, aggressive stop loss positioning would yield a 2.25 R, right? I don't trade with aggressive stop loss positioning myself, because the data shows me that I am way more profitable just trading with the safest stop losses. So, any questions about this? Right, and if you notice, price came, hit my target, then went back up, and then just chopped around. But this was a good trade that I didn't take today, right? I didn't take it today, but it's a great example of what I look for every single day. Now, any questions? Any questions? Adiós, Angelita. Sorry. My housekeeper was saying goodbye. But yeah, this is what I look for every single day. Right? Any questions before I continue? I'm going to talk about confluences right now, which is very important. And I really didn't wanted to start with confluences because it is easier to understand what I'm talking about if I leave confluences for now. Is this a scenario that occurs once a day on a pair? Yeah, this entry model happens almost every single day. This is the entry model I base my VIP signals on. this strategy used when New York Open better than other times? It is the same thing, mate. It's the same thing, right? The reason that I'm showing you the London Open is because 80% of the times when the New York session opens, the move already happened, and you would be looking for add-ons on a move that was created during the London session. So, but yeah, I mean, it depends. If you are, I mean, on the, I trade both the London Open and the New York Open. When I trade the New York Open, my focus is, U.S. equities, S&P 500, Dow, Nasdaq, in gold. This strategy used when you're, is this scenario that occurs okay, cool. Do you have a daily target or do you trade as much setups there are? Now, that is an amazingly good fucking question. And that's a great question. So, here it is. You can, I mean, there will be days that I'm going to find, 4, 5, plays on different instruments, right? Now, let me explain to you. The pound yen, the euro yen, Aussie US dollar, the pound US dollar, they are instruments that I trade, the markets that I trade on, right? And the markets that I actually trade is the US dollar and the Japanese yen, which are the two charts that you see on the bottom of my screen, right? So this is a long play on the US dollar. This pound US dollar short is a long play on the USD. And to answer your question, no, I do not take them all. If I'm looking for longs on the US dollar, right, some days I'm going to have short setups on the pound USD, short setups on the euro USD, and possible long setups on the US dollar, Canadian dollar. But those three setups are USD based trades. So I choose to trade the best one of those three, right? Yeah, sometimes, and it has happened, if you're a VIP, you have seen this. Sometimes I'm going to trade the one that moves the least, and and it happens. It's okay, but I only trade one setup on the market that I'm looking at. Now, if I have a short setup on the pound US dollar, and I have a possible short setup on the euro yen, yeah, I'm going to trade them both because the pound US dollar is a US dollar driven setup or driven trade, and the euro yen is a Japanese yen driven setup. Now, how many trades do I take per day? I do not take more than 3 trades per day. And it's simple, and the math goes like this. If I win the first trade, right, and I win the second trade, I'm done for the day, right? I'm sorry, I only take, I'm done for the day, on a profit. If I lose the first trade and I win the second trade, I only take 2 trades per day, I'm sorry, not 3. So if I win the first one and I win the second one, I'm done for the day in profits. If I lose the second one, if I lose the first one and win the second one, I am done for the day in profits. Why? Because if I lose the first one, I lose 1 R. But if I win the second one, I'm going to win on average 1.8 R. So I'm up 0.8 R. If I win the first one and I win the second one, I'm up massively. If I if I lose the first one and if I win the first one and lose the second one, I'm done for the day, and I'm still up around zero point 0.8 R. And if I lose the first one and if I lose the second one, I'm done for the day, down to R, which is around 1% because my average risk is 0.5%, which is my daily stop loss. So I do not take more than 2 trades per day. That is my rule. It's basic math because if I add a third trade, the math gets a little bit more complicated, and the scenarios on which I would probably, end up the day on a loss are much more than if I only take 2 trades. I don't know if that makes sense. Is there a particular reason why you only trade dollar and yen? Yeah. Yes, there is a reason. Excellent question again, mate. And the reason is simple. I know these two markets. I know, I have spent countless hours, back testing them, trading them, forward testing them. I know these markets like the back of my hand. I don't know if that is an expression in English, but these are the two markets that the data shows me I am most profitable in. So this is what you need. It's all about data. We'll leave the ego, at the door. This game that we play, it is a game. It's a zero-sum game, right? It's all about your data. It's all about understanding where you are profitable. It's all about doing the same exactly fucking thing every single day. And, on Instagram, TikTok, or whatever, when you see, traders, right? Cheering in front of their screens to a trade, that's bullshit. A real trader is never going to show emotions whether a trade is in profits or a trade is in a loss, right? Because the edge comes from optimizing your decision-making process on the things that you can control, right? After your decision-making process ends, what you cannot control comes in, right? And you have to be okay with that. Why? Because if I lose, 4 trades in a row, which would be in 2 trading sessions, I am okay. It doesn't affect me because I know the math behind of the setups that I'm trading. I know the math behind what I'm doing, right? So on a vacuum, doing this over and over and over and over on these markets that I trade, prints money. It's all about, the data, right? If someone ever tells you that they know that the price of any given asset is going to be at any given, price level in the future, they're fucking lying to you, because what they're saying is that they know future auction, which no one ever knows, right? Yeah, that's about it. Okay, nice. So you diversify across in case you are wrong on either entity? No, I don't. I do not do that. I do not do that. Yeah. So I'm gonna take more questions, and I'm going to leave the second part of the webinar for Thursday. Today is Wednesday. Today's Tuesday. Today's Monday. So, shit, Wednesday. So Wednesday. Wednesday is my next webinar, right? And again, if you are trading, something very different of what I'm talking right here, do not, and I repeat, do not jump in to try to use these concepts on your daily trading. Do not do that. If what I'm talking about makes sense to you, start back testing it, start monitoring the market, start, I mean, every single day that you're in front of your charts, just look at what happens, right? Back test. I mean, I don't, I, you can't even back test it because you don't have an entry model. I mean, I just explained mine, but this is just one example, right? It's a little bit more complicated than this, but this is basic concepts or basic ICT concepts that I used to create my entry model that I trade with every single day. Which I mean, it took me. I mean, it took me almost 10 months, to confidently trade this every day. If you have been a VIP for a long time, years, you know that I didn't trade like this. I don't know, a year and a half ago, right? But everything is about evolving, right? And it's hard work. It's hard work, but this is not a talent, right? This is not a talent. I wasn't born an okay trader, right? This is a skill that fucking anybody can learn. You just need to put on the work, the dedication, and the discipline, right? But this is not a talent. Anybody can do this, right? Anybody can do this. And it's all about math, you know. What I told you about only placing 2 trades per day, does that make sense to you, right? The math behind that, I mean, there's only one scenario on which you would be down for the day, and that is if you lose 2 trades in a row, right? You have a hard stop after that, right? But there's 3 scenarios on which you would be up, and because this particular entry model yields and above, I don't have the exact number, but I think an above 70% win rate. I know the fourth scenario on which you are going to be down only comes only on. I don't have the math. I'm looking for the file here, but I mean it occurs not that often, right? Not that often. So yeah, everything is about that. I mean, why? I mean, if you're a VAP, you already know. Why do you think I haven't placed too many? I mean, too many trades these past few days or last week? It's because of this, right? Let's go and look at what has happened, right? On pound yen, right? Right. I mean, on the euro yen, just have a look at this. I mean, the euro yen just flew today, and there was absolutely no setup. Yeah, there was a setup. I just saw it. I missed it. Whatever, right? But look at gold, right? I mean, do you really want to be trading these markets, these ranges? Do you really want to be trading this? Absolutely fucking not. Absolutely not. Absolutely not. Absolutely not. So this game is not about placing trades. Anybody can do that. I mean, if a real trader is by definition someone that clicks the buy or sell button, anybody would be a trader, right? A trader, a real trader, right? Uh, really doesn't focus on P&L or winners and losers or the amount of trade that they take. They focus on equity, right? On preserving equity. Focus on their decision-making process and on only trading the highest probability setup ever. And they stay fucking away from, this is burning money. It's hard enough to make money in these markets to just give it away trading this, right? So I'm going to say goodbye now. I've been for, um, you know, um, 50 minutes. Hold on. And if you enjoyed this webinar, I'm going to send a link to get your feedback. It'll be cool to have your feedback. And, the second part of all of this is going to come up again on a few days in my next webinar. Thank you for joining me, guys. I hope that I explained my thought process on what I do a little bit clearer I used to, but it's a lot. And again, if you have any questions, just join my next webinar. Cheers.